Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed. I am your host, Jake Kingsley. Jim, the Jackrabbit Matthews, is on the road in South Dakota right now. Many of you may remember from a fairly infamous episode almost 2 years ago now. He tried to get me canceled in that state.
Jake, what is the nickname for the state of South Dakota?
I don't know, the President's Mountain State? Not today. We've got with us a wonderful panel of industry experts here. Of course, from Atlanta, Illinois, Verl Prather, our buyer relations director. Kristin Stien from somewhere in Iowa, our senior market advisor for our grain producers, and Kathleen Wolfley from the lovely state of New York, I was just out there a few weeks ago, is our market intelligence director. Folks, how are we doing this morning?
Somewhere Iowa is a great place to live.
I hear it's pretty nice out there these days, Kristin.
Iowa's the best place. Doesn't matter where you're at in the state.
Average wind speeds must be like plus 50, right?
40 mile an hour. Yeah, exactly. It's a windy day at 70 mile an hour.
Speaking of weather conditions, I think we had pretty favorable weather to get through the harvest window here. We've pretty well wrapped up that part of the crop year for most folks. Now shutting the bin doors for the season for a lot of these guys. We've made it through an election. We've had our WASDE report just a few days ago. Now we're kind of focused on, okay, what's the new year bring and how does the South American weather play out? So let's talk about that a little bit here in just a second or two, but I will go ahead and take a look if Lexi could timestamp the broadcast. It is shortly after 10 a.m. Central Time on Thursday, November 14th. We have the corn market down about a nickel with December futures trading just around $4.20 a bushel today. The entire soy complex has been under pressure for a handful of days now with soybeans, January soybeans trading $9.93 a bushel. Meal trading $2.87 on the December contract, and soy oil taking a beating the last couple of days, back down to right around 45 cents per pound in that market. Dairy markets are off a little bit this morning as well, with December Class 3 trading right around 18.62 and December Class 4 trading just a hair over 21 at 21.11. Crude oil up 60 cents or so today, just over $69 a barrel on the December contract. All right, team, we've got a lot to work through here this morning. As we had mentioned earlier, we are all but wrapped up on harvest. I think as of Monday, data good from Sunday, we had cleared the 90% harvest progress mark on both corn and soybeans. Some dry weather let us kind of race through that. Feels like we're done pretty early for midway through November here. Kristin, how did things go in your part of the world?
I mean, harvest went phenomenally well. To your point, there was dry weather all throughout. The wind certainly helped speed up the drying of that crop as well. So it was really interesting because going into harvest, everybody was anticipating a really big drying bill. And then all of a sudden the heat ramped up, the wind ramped up, which wasn't so great for field fires, but it was great because, I mean, the dryers barely got turned on, if at all. As you look, I mean, the scary part is, or maybe not scary, but interesting part is with how dry beans and corn were getting harvested, just because it went from 15% beans down to 8 pretty quickly and 30% corn down to 15 pretty quickly. You just can't help but wonder what the yield would have been like had we had the moisture in that crop as well. I mean, by and large, in this somewhere Iowa that I'm in, eastern Iowa, I'm basically seeing or hearing a lot of 260s to 290s for whole farm averages on corn, and hearing a lot about this 65 to 75 bushel farm averages on beans too. So guys are really, really happy with what yields turned out to be. By and large, you'll hear especially in the areas that we had prevent plant issues or way too wet of planting conditions. They're obviously far less than that, but by and large, everybody's really, really happy with not only how harvest went, but what they were seeing coming off the combines as well.
Now that these guys have kind of wrapped up and are starting to, as we say, close the bin door for the season, how are they feeling as far as what they've got sold and price that they're dealing with there? We've had a couple of little rallies here recently to maybe take advantage of. What's price looking like for these guys?
I always answer that question in a two-part. One, what are our clients do versus what the average producer doing right now? Because especially this year, there seemed to be a lot of disparity with that. So going into harvest, the average producer was incredibly undersold compared to normal. We were hearing that from bankers, from grain buyers, and just our anecdotal evidence in talking to guys as well. So I think that the overrun that we saw, a lot of that got priced, but I think the stuff that's in the bins is still well underpriced as well. And I'm saying that based off of what we're seeing basis do as well. We're seeing basis continue to either stay steady or slowly tighten up as well, getting closer and closer to that option type level, even for the nearby deliveries. So to me, even the rally that we saw last week with how great it was for the producer, we didn't see basis back off whatsoever. And so it's just like, all right, there must not have been a whole lot of selling that went along with that. Personally, I think that between now and the new year, if guys needed cash flow, they were going to get it from the bushels that went in during harvest. And once that grain is locked up basically into the new year, it'll stay that way. I personally believe that's going to be the case. I'm pushing my specific client that had hedges on to be prepared to take advantage of a basis pop based on that information alone. I think there's going to be opportunities that way.
I think, yeah, big crop on the ground out there, a little bit of opportunity to get some of this moving, but like we kind of anticipated, harvest is done, the stuff's tucked away. Basis is going to have to do some of the work to move it. I don't anticipate a huge run up in basis to get this stuff to pull back out of the bins. Do you?
It doesn't have to be big, right? To your point, when guys are now reevaluating what it's going to take to break even or make a little bit of money on this crop, they're able to bushel their way out of it, even with the lower prices. So to your point, I don't think it's going to have to, especially as we turn into the new year and they start needing to core bins, they start needing to look at their cash flow situation going forward. I think that's what's going to do more of the work than what basis will have to. The other piece of that is the farmer's not the only one that can move that grain, right? So we heard a lot of reports of piled corn or corn on the ground, or the elevators that just got bombarded all at once with this fast and big crop. There was a lot of grain on the ground that went uncovered. And right after a majority of harvest got done, we saw a good 2-week stretch of rain. And so now those elevators are saying, oh, we better move that so we don't have spoilage issues going forward. So I think that'll help bridge that gap in the meantime too.
Well, there's a big crop out there. It's going to have to move at some point. Verl, you're more in tune with the commercial side of this thing and maybe some of the exports and other places that this stuff's headed. We had a WASDE report out last Friday. What are you seeing from that side of the grain market?
Yeah, well, the USDA came out with their WASDE on Friday, and much to what Kristin was pointing out, right, it seems like this dry end of the crop season really took a damper on some of the yield expectations. USDA came in, cut corn yield by about 0.7 of a bushel, but the big surprise was on soybeans, where they whacked 1.4 bushels off of the national average yield. That was much larger of a slash than what the market had expected coming into this report. And ultimately, although it was a large cut to production on soybeans, the balance sheet is still really healthy, right? We took 550 million bushels of ending stocks down to 470. On the corn side of things, one of the most interesting pieces to me is that demand for the first part of this marketing year so far, so we're talking, 10 weeks now, has been incredibly strong. Ethanol is hanging right in there. We're about 90 million bushels ahead of pace needed to reach the overall yearly estimate. Exports are very strong as well. We've accumulated about 48% of the total commitments of the U.S. corn export full year estimate already within that 10-week time frame. Now, there's this theory that, all these global buyers are just front running the new administration coming in, and that certainly could be the case, but we'll have to wait to see if this demand kind of continues. As of right now, the USDA has done very little to address the increase in demand that we've seen so far this year.
Yeah, we're keeping a close eye on that one, try to figure out just how much of kind of each of those three categories we've talked about really account for where this grain is going. Is it a hedge on South American weather or a hedge against potential tariffs? Is it some bargain buying down here near some historical and psychological thresholds? To be determined, but we're watching that one pretty closely. I think we'll get a little clearer picture over the next handful of weeks as we get a new administration in place and we get the South American crop a little further along in its growing season. We'll check a couple of boxes there. So certainly still some opportunity to take advantage of in the feed market for our buyers. Plenty of opportunity to manage risk. We're even taking a look at some very early cost-effective ways to manage some risk out into the 25-26 feed year. Not taking a big chunk out of that marketing year yet, but there's some nice pricing opportunities out there. Big balance sheets don't make us overly anxious to go get a whole lot done there, as we could see prices continue to drift lower, but still opportunity to take advantage early, especially with all the happenings going on over in the dairy market, which Kathleen, I think we've talked about kind of a shift in the marketplace here on the grain and feed side over the last handful of weeks. I think you guys are experiencing something similar over in your world. What's going on over there?
Yeah, I think that's a good way to sum it up, Jake, that over the course of the last, let's say, 3 weeks or so, we've definitely seen a pretty big washout in the Class 3 market in general. And I think that to some extent, there's a realization of, hey, all these supply constraints that we've been talking about for months, particularly given reduced cow numbers, limited availability of heifers, HPAI or avian influenza that's been moving across the country, it's definitely stifled the output side of things, particularly on cheese, through the summer months. And then turn around in August and September, we saw positive milk production for the first time in 13 consecutive months. And we have new cheese plants that are starting to get up and running, and expect to see more of these new cheese plants getting up and running in the next couple months. And there's a realization of, holy smokes, we were worried about supply 6 weeks ago. I don't know as though we need to be as worried about supply going forward, particularly into 2025. And that really put a big shining light on the demand side of the equation. Demand has been pretty okay for much of 2024. It's to some extent been able to hide behind the tight supply situation. But now with supply less of an issue, it's definitely put demand back in the limelight. And I think there's this big realization in the marketplace now that, hey, if we're going to make all this extra cheese, if our supply situation is a lot better, we really need both domestically and in the export market to be running on full cylinders. To sum it up, I really think that some of the collapse in the marketplace over the last couple of weeks is this shift in tone away from supply constraints and toward demand concerns for the year ahead.
All right, so that's a pretty good look at the cheese situation there. What about the butter and powder side of the dairy equation, Kathleen?
Yeah, I think that's a good question, Jake. We have definitely seen powder prices run up toward some of the highest levels in quite some time in the spot market. On the flip side, butter prices collapsed back in September, early October, and we maintain at these pretty weak levels compared to where we were early on this year. We're trading around $2.65 in the spot market. So we're going into the tail end of this year and on into 2025 with a fairly healthy price on powder and a little bit more weakness coming into the butter space. In general, Class 4 prices are still holding up near some historical high levels going into 2025. And that kind of brings me to what we're thinking in terms of risk management for producers. There's a lot of uncertainty as we go into next year, particularly as we add new capacity and figure out where the milk flow is going to go, what's demand going to look like in the domestic market, and hey, demand in the international market is a big uncertainty as well. So we're really focusing on setting floors, either using options or using the Dairy Revenue Protection Insurance Program to limit downside and leave the upside open for producers. At the end of the day, the margins still look pretty good at the prices we're trading today, particularly given weaker feed prices.
Okay. Yeah, I think a lot of opportunity out here. Like you said, things look still pretty attractive on paper, but you've got to manage it responsibly. So a lot of time left still to do that, but the opportunity is in front of us now. So time to step in and take advantage of something there.
Hey, Jake, can I ask you a question?
Yes.
The plant behind you, and for those that are listening, Jake has this gigantic plant over his, I guess it would be your left shoulder. Does the plant have a name?
It doesn't have a name.
Can I offer up a name?
Yeah.
How about Priscilla?
Okay. We can do that.
I mean, you can ask.
How do you feel about that name? We're getting what appears to be a nod. I hadn't thought about it. We'll come back to you next week on it, Kathleen.
Okay, good.
And comment down below if you have other name suggestions.
Yes, please. All right, everybody. I think that'll do it for today. I appreciate your wonderful insights. Thank you, Paige and Lexi, for your production magic. Thank you to the Insights crew for all of your wonderful data and charts. Thank you to the viewers. And that is all for this week. We will see you next time on the Grain Feed.